Alright guys, welcome back for another video. So I think today's video is a little bit of an important video just because, I realized I haven't done my own story. I've interviewed a few other people on their own trading journey, but I haven't really documented my own. And it's something that, I really haven't looked back on in a lot of detail. A lot of times people, will create a certain narrative for themselves or a different story, out of a need for their previous story to mean something, to, for some of the things they went through to have a greater meaning than, to make some of the, the trials and tribulations mean something. I never really felt the need to do that. I kind of understood when I was going through the process that, part of the process is, to struggle and to, run into issues. I kind of accepted that was part of the process. I first got into crypto basically at the bottom of the bear market in 2018. So, that was kind of fortunate in a way. I would have had a much more difficult time if I had gotten in at the top. Pretty much the classic story is, people who long the top in 2017 and, kind of get totally wrecked. I never really had that issue, but of course I encountered a myriad of issues, trading and, but they weren't, one way directionally focused, right? I kind of got hit from every angle. And of course, when I was first starting trading, I was, in my early 20s, mid 20s, and I was, very cavalier in my risk management. Well, I didn't really have risk management. I mean, I had a stop loss in the market, but it wasn't like my position size was far too big, right? So even though technically I was managing risk because I had a stop in the market, I was being totally irresponsible with the size of my positions. It was just way too big. So, I kind of had a very boom and bust expansion in my equity in my trading account. I would have great run-ups and equally disastrous rundowns. That typically that, at least for me, that was a pattern that I didn't really recognize until much later on. But looking back, it was very clear for me. It's one of those things where now looking back, I realize that the most dangerous emotion I faced, at least for me personally, I think it applies to a lot of people, is the feeling of euphoria, because that actually preceded all of the major drawdowns that I experienced initially in my trading career. I would have these major run-ups, right, and get the feeling of invincibility, right, and I would feel like I couldn't lose, right, and of course that is the most dangerous feeling you can feel as a trader. When you start feeling that, then you start violating your risk management principles, and it is really amazing how quickly you can give away, a losing or a winning streak that took several months to build up. How quickly you can give that back to the market. A lot of times it happens very, very quickly. And it's one of those things where you don't realize it's happening until after it's happened. So I would have these major upswings, major downswings, and my trading equity would kind of return to the mean, right? My risk management was always very good during drawdown periods when I was fearful, right? Whenever I get afraid at the market, I really tighten up my risk management. But in the exuberance phase, I would loosen up my risk management and kind of loosen the strings a little bit. That proved to be extremely disastrous. And I kind of swung back and forth, right? I would have these what seemed to be these like major life-changing gains, and only to give it all back to the market, right? And then a little bit more too, and then build back up and kind of do the same, kind of start the same process over and over again. And I kind of went through this cycle like a few times until I realized that there was a cycle occurring, right? And I could intervene in that cycle, and I could kind of figure out a way to disrupt it. And the only way to disrupt it was through the proper use of risk management. So, whereas before I won't even say how many, how large position sizes I would take. I mean, it was hundreds of Bitcoin, very, very irresponsible. And of course, like the major gains were huge, but the major drawdowns were huge as well. So in order to kind of elevate, the only thing that really helped me elevate was a risk management system. Really like refining my edge has been great. It's been really helpful to reduce opportunity cost, to like make sure that, I'm only in a position when I really need to be in a position, when I have an edge. I'm not spending all of my time, all of my waking hours in a position, right? I only enter a position when I need to be in a position. That's been helpful, just for my like total lifestyle. But what really turned around the profitability, and not so much make life easier, because risk management actually makes life harder, but increased my profitability dramatically. The only thing that did that was risk management, and getting really definitive about the parameters I use to manage risk, to enter a trade, to exit a trade, to take profit, to form a stop loss. So right now, currently on my live account, what I'll typically only take at max, I'll only risk 0.15% of my entire account in any given trade. And people will see that and they'll be like, wow, that's crazy, man. Like you really don't have a lot of risk on any given trade. And that it's designed that way for a reason, right? Because I know that there's a certain threshold where, if I hit that threshold of a drawdown, I'm going to, my psychology is going to break, and I'm going to enter into a negative spiral. So the whole point of that, using a low risk on a per trade basis, is to avoid hitting that threshold, to avoid, getting into a situation where you start breaking down your mental psychology, and then you're no longer able to perceive the market in a way where the market, where you're looking at the market objectively. And really that's the whole point of risk management, right? And it applies to the upside as well, right? You want to have some type of risk management system where, it protects you from downside drawdowns, but also extreme equity raises in your account, right? If you violate your risk management parameters and it works out for you, and of course risk is a double-edged sword, but say that you violate your risk parameters and go incredibly leveraged position in Bitcoin, and you have an incredible success in that position, well, that's going to break your psychology too. If the equity in your account goes parabolic, that will also break your mental psychology. So, anybody who's, if you're trading money professionally for other people, right, managing other people's money, or if you're like working for a prop firm or a Wall Street firm, they're going to look at your equity curve on your trading account, and they're going to want to see very little volatility in the equity curve of your account, whether it be to the upside or the downside, right? They don't. If you suddenly go parabolic in your equity curve on your account, they're not going to see that as positively as you will see it or experience it, because they've seen all that stuff before, right? They've seen people, they've seen hundreds of people break their mental psychology, and they know exactly where that is. And of course, some people are different than others. Some people are more resilient than others, but for the most part, those areas are basically around the same area. And people, tend to kind of, we're all human beings, right? We're not cyborgs, so you may be a little bit more resilient than, the guy standing next to you, but not on any order of magnitude that's extremely significant, right? So you have to apply the same standards you would apply to some other random guy who was trading a trading account as you would to yourself, right? You can't fall into the trap of thinking of yourself as like enlightened or superior to other people, right? That's very dangerous territory to get into, and that's the type of territory that people who are, if you go down that path, right, then you'll start violating your risk management because, you start to think of yourself as better than other people, and that you can, generally know what's going to happen in the market next, so you don't necessarily need to manage risk like other people do. Again, that's the type of thinking that we get into when we, come off a very, very heavy winning streak. And, it's a pleasurable state of mind to be in, right? I've been in it. I've experienced it. It feels good. It feels good to be in a state of euphoria, but it's extremely dangerous. So try to avoid that at all costs. Anyway, it's a long way of saying that my initial trading career started out with, some heavy losses, some big gains as well. Managed to, protect my account, not get my account liquidated, despite using the irresponsible risk management, mostly thanks to a stop loss. So I entered the Bitcoin market, the crypto market broadly, in the depths of the bear market of 2018, and kind of, started, but naturally, my sentiment was a little bit different than the realities that exist in the market. So, of course, at the $3,000 low in Bitcoin, I was really bearish. And then when it rallied off the $3,000 low up to $14,000, of course, I was feeling bullish at that point. And then when, it spent the next 8 months going down to 3,000, of course, I got more bearish at that point. So my sentiment was always totally contrary to the realities that exist in the market, right? Because it's hard not to, right? Everything you're looking at that time, everybody around you, all the indicators, everything is going to say to do the wrong thing. So you have to, kind of work that out of your system as you go forward, right? The more you see that, the more you realize that, okay, like, it could be a situation where everybody and everything I'm looking at, every piece of information is telling me to do the exact wrong thing. That's actually possible. And it's something I've found to be very common. So anyway, it's a long way of saying that, I kind of struggle early on in the market, and then I realize, okay, if I'm going to be successful, I need to have a risk management parameter. I need to, clearly define where my exit, my entry is, instead of trying to make broad predictions about what the market will do over a long period of time. I'm going to make, realistic, prudent decisions about what the market will do in the near term, right? And manage risk accordingly, right? So part of that means, rather than looking for an entry, the ideal entry, which is a lot of people do, they start out doing that, I kind of shifted over to looking for the ideal exit, right? And I would look for, okay, well, if I was long or if I was short right now, I would wake up every morning and entertain both ideas, right? I would say, if I were long right now, if I opened a market long right now, where would I need to exit? And I would do the same exercise with the short position. I would say, if I entered a market short right now, where would I need to exit? And doing that exercise really was very, important for me, and really catalyzed my growth as a trader, because the answers to those two questions, right? The invalidation to the long scenario and also the invalidation to the short scenario, those levels, and identifying those levels, help me to identify the areas of maximum risk reward in any given market situation. So rather than looking for the ideal entry, I started to realize that, okay, if I identify the invalidation, then I can, the closer the price gets to the invalidation, the more risk I want to add to the position. So I can kind of, maybe identify a invalidation on the daily chart and then kind of create a scenario where I can scale in on the lower time frames, right? Adding risk as price gets closer to the invalidation, right? Which is the opposite of market psychology, where people, they get scared the more the price gets towards their invalidation. And the further away price gets from their invalidation, even if they're even thinking about the invalidation in the first place, the more they will, allocate to their position, because the more they think that they're, the price moving away from the current market price is a validation of their bias. And of course, that couldn't be further from the truth. What they're ultimately doing is just chasing the price. So anyway, that was kind of a journey for me, and then also, kind of realizing that, the market tends to move towards liquidity. So I started to see the market in the sense of like, okay, where is everybody putting their stop loss orders? And I would like map the charts looking at like, okay, where is everybody's stop loss orders? Well, once I started doing that, then I realized that, those areas tended to get hit by the market. So I'm like, okay, the market tends to run for liquidity. If I map off stop loss orders, I'm going to have an edge there, right? The market is going to run towards that area more often than not. And if I position myself accordingly and hedge properly, then I can make a profit. And so I started to do that, and that was really the point in my trading career where I started to get profitable, where I started to make money. And, it was, it's a weird experience at first because, you're not really prepared for it, right? If you spend a lot of time losing money, when you start to make money, you're kind of on guard, right? You're kind of in disbelief a little bit because you're not used to it. But again, of course the drawdown will come at some point, but if you have an edge and you're using risk management principles, generally your equity will just trend up over time. And it'll generally trend up until you start hitting psychological barriers, right? There are barriers within your own mind that will start sabotaging your success. Those are internal beliefs about what money means, what success means, your own internal opinion about yourself. Those things, maybe you have a religious background. Those type of things can all kind of come in and sabotage you on your path to success. And you kind of, it's very difficult to identify each of those beliefs, prune them out. And for everybody, it's going to be different. For me personally, a big one was being unsatisfied with my current life, and not being a fan of where I was at in life and where my trajectory was going. So that would cause me to violate my risk management principles. I would go into the market and, try to make a lot of money because I ultimately on a subconscious level, I wasn't satisfied with my life, right? I wanted to push the boundary of risk to make a excessive profit, to make money, to change my life in the better direction, right? Well, that always backfired, right? It always didn't work out. At the end of the day, for me, I learned that you have to submit to time, right? To the idea that this process is going to take a long time, right? And if you're doing it following a proper risk management profile, you're not going to make profit. You're not going to make profit as fast as you would like, right? It's going to be a slow and steady marathon, right? Of course, like if I told you it was going to be that way, you would say, yeah, it should be that way. But, we all want to get rich quick. But very few of us know anybody who got rich quick. Most of the people we know who got rich over a long period of time. Being diligent over a long period of time. Being disciplined over a long period of time. So if, we can recognize that, most people who, got rich did it over a long period of time, then, it doesn't take that much humility to realize maybe the same concept applies to myself, right? Maybe I'm not so adept, not so intelligent that I can circumvent that natural reality and shortcut everybody else. Maybe I have to submit myself to the same principles of discipline, of time as everybody else. And for me, that was a big turning point as well. I kind of, got into the place where I started to realize that a lot of the other people in my life, were not doing that, right? They were taking any profits and, going to the bar and, blowing those profits very quickly. And very few people in my life were like in the process of building wealth. So naturally I had to find a different group of people to compare myself to, a different strata of people, so to speak. And, naturally that's what rich people tend to do, right? They tend to compare themselves on a linear level to other rich people, right? They don't really compare themselves to, people working a 9-to-5 job. And that's mirrored in the fact that, a lot of people will say, well, they'll hear, some rich guy got $100 million in a business deal, and then he's still working 24/7, kind of in a job where he, maybe neglects his family, doesn't spend enough time with his family. And, the perspective of the average person is, well, he's got $100 million. So, can't you take it easy? Can't you, rest a little bit? But for that guy, he's comparing himself. He probably has a friend who makes $150 million a year, right? So if he starts slacking, the standard of measurement we use as humans is a social standard of measurement, and we naturally compare ourselves to people who are slightly better than we are. And that's not necessarily a pleasant way to live your life, right? It'd be much more pleasant to be content with what you have, no matter how little that is. But that's not really how we operate. And if if you want to be successful, it's not necessarily a bad thing, right? To kind of give in to that inclination to compare yourself to people who are doing slightly better than you are. It always keeps you moving, always keeps you, thinking positively. And if you're trading, right, yes, trading is an individual game, but the market is also comprised of, groups of people who are in direct competition with one another. So if, there's a little bit of satisfaction into, being on your grind, refining your edge, on those days where everybody else is going out partying and having a good time, because the market is just you versus the market, but on another level, the market is also you versus all the other human beings in the market, and getting that little edge on them in discipline, at the end of the day, at least on a professional level, can certainly be the difference, right? I mean, if you compare it to being an Olympic athlete, if you take it very professionally, then you're naturally going to reorganize your life in a way that, reflects a professional state of mind. Now, what actually is a professional? How do you define a professional? Well, a professional is somebody who shows up and does the work. That's really my only definition of a professional. An amateur is somebody who does the work when they feel like it. But trading is a daily endeavor, right? You have to show up every day and ask yourself the hard questions that challenge your bias and force you to manage risk. And if you can't do that every day, you probably can't be a professional, right? Because this is a daily grind. Yes, we can take time off, but if we're in a trading career, we're obviously going to spend most of our time on. We can't hide in ignorance. We can't turn away from the market because it's unpleasant. if you have that type of mentality, it's going to be a pretty rough ride. But of course, if you hang on long enough, the market will teach you. That's another principle of mine, is that, if you spend enough time in the market, you'll naturally become a good trader, as long as you can survive in the market, because the market will teach you, just through experience, right? And that experience will be greater than anything you can learn in any book, right? You can't write a book about risk management. I mean, you can write a book, but you can't convey the sense of importance of risk management until you've actually experienced what it's like to lose, and lose significantly. So again, trading is not a knowledge-based thing. It's a skill, right, that has to be refined over time. So for me, again, going back to the risk management and the seeing liquidity concepts, that's kind of what got me profitable. And that's something that isn't directionally based. Most of the time, people perceive me as being very bullish on Bitcoin, but really, most of the time, I have about 50% of my portfolio in cash and 50% in Bitcoin. There's very brief periods where maybe I violate that principle, usually around the Bitcoin halving, right? Right after the Bitcoin halving, my portfolio will generally be 100% Bitcoin, right? I'll be 100% Bitcoin and really have no cash, but that's because of the dramatic supply cut in the Bitcoin network. Anyway, I started to refine some of those liquidity and risk management concepts, and I did very well, and during the bear market, during the bull market, I did very well. I would make, roughly 40% year over year on my account. But really the one thing that sent me down the Bitcoin rabbit hole was realizing, I'd had one of the best trading seasons of my career, and, doing 40% year over year, 40% each month. So I had to have 1 month after another where I had 40% gains 1 month, then 40% gains the next month. But, that was during a period where Bitcoin was going parabolic. And I wasn't necessarily denominating my account in Bitcoin. I was denominating in USD. So while I was trading it effectively and getting long where I needed to, because I wasn't denominating my account in in Bitcoin, I was actually slightly underperforming the Bitcoin market. So I was putting all this effort in and performing so well and, having such a great return in USD terms, but still underperforming the Bitcoin market. And that was for me, that was like a light bulb went off in my mind, because I realized that, anybody who didn't know anything about trading could have just bought Bitcoin those few months and totally outperform me. Now, of course, they wouldn't do it through the bear market, but, any old person could have, just outperformed me just by buying Bitcoin and holding it for, a couple months to a year. And that for me was really, it set the light bulb off, because I realized, very few traders, outperform the Bitcoin market. Now, of course, I'm not saying that they don't. Of course, there are a lot of guys out there who are outperforming the Bitcoin market. I'm not saying that they don't exist. I actually know a few of them personally. But I'm talking the vast majority of people. The vast majority of traders out there who not only are they underperforming USD and losing dollars and, losing their trading account in dollar terms, they're also, even greater number, never going to outperform the Bitcoin market. And so for me, that was like a huge wake-up call for me, realizing that people use the word gold standard, right, to reference the gold and something extremely valuable. But in terms of performance, I think the gold standard will be for a while the performance of the Bitcoin market. Very few fund managers are going to outperform Bitcoin over a long period of time. Now, they may outperform it over a couple months, just due to the volatility, right? And that volatility, if they outperform Bitcoin over a few months, they'll start to think of themselves as a genius. Right? And they're like, oh wow, I'm so smart. I got on the correct side of this volatility. Well, what happens when the volatility swings back? Are they going to be able to time all of that perfectly? Well, obviously not, right? I mean, and then the more swings in volatility you have, even the more likely that becomes, right? So a lot of these guys think they're geniuses in the long term, but the guys who are going to make the most money over the long term are the people who respect Bitcoin, the people who don't try to fight it, right? The people who try to slightly outperform it, right? Have a little bit degree of respect and humility for the best performing asset in the entire world, and don't try to fade it too much, right? I mean, it'll do most of the work for you, right? All you need to do is slightly outperform it. And if you can slightly outperform it, you can outperform everybody. And I think, that's kind of where I am right now. Now I know that is not going to resonate with most people right now because they're kind of, we're at the depths of the bear market and people are in a fearful state of mind. There's certainly a lot of stuff out there, in the news that's going to, incite that or invoke that state of fear. All I would say is that, turn off the news, turn off the TV, have a little respect for Bitcoin, and